The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hey everybody, this is Larry. We're doing this a little different today. We're going to be on YouTube as well as you're able to see it online. So just want to make certain that we got everything up and running here for everybody. I assume you can hear me. Alex or Alexander, anybody can raise their hand if you can hear me. Aaron, hey Aaron, how are you in Singapore today? Wow, we have people from all over the world. So, oh, good, you can hear. Aaron, you're on the web. Okay, good. So you're able to hear me. We'll start we're supposed to start on the hour. That's about 2 minutes away. We'll start that. I've been looking forward to this. There's some questions that have come in, and I have some new information that I wasn't able to get in the forecast report because I just stumbled into it a few days ago, and it's really exciting to me. It's a little longer term than I'd prefer, but it's a real breakthrough in my work. So I really want to be able to show this to everybody. It's going to give us a long-term perspective, but I think going to really, I was kind of blown away at what I found here. So I'm looking forward to showing that to you as well, and showing how we can use these forecast reports. So we still have a lot of people coming in, Louise says, so we always listen to Louise here. Oh my gosh, a lot of people are coming in. Okay, so we'll welcome those of you who are coming in. We will start in just a moment. What I'll be doing today is explaining a lot about how to use cycles in trading. I even was thinking yesterday, I didn't tell you this, Louisa, maybe starting to write a book, how to use cycles in stock and futures trading. I don't know that anybody's ever really done that thoroughly, and I don't know that I can do it either. This is it's a big subject matter, but we're going to be looking at that today. So I think we're about time we can start. So I'm going to advance to the next slide. And of course, that's where we are. We're flying into the future here. Thank you for joining us. I see more people have come in, so we're about there now. And of course, the first thing you have to do always with these things is go the disclaimer: the past is not the future is not the past. If you haven't figured out that there's risks in doing this, well, you should get off your computer right now. This is a risky business. That's all I can tell you. Okay. This is being recorded. Will be posted. You will be able to review it, so you can hear my errors or whatever happens as well. So if you have to leave, you can do that as well and come back on in. So we're, I think, ready to start. Oh, more people are still coming in. Just a little background on this year. I think it's kind of been, 2022. People look back on it as being a big bear market, but if you look at the Dow itself, I'm going to talk about that in a moment. The Dow was only off about 9% for the year. So what got hammered was the FANG stocks, the new age stocks, the hot stocks, the Bitcoin, of course. Oh my gosh, the standbys really didn't get beat up that much, and I think that's an interesting point for us, because what we saw in the FANG stocks and the triple Qs and all those were stocks that had incredibly high PE ratios, and fundamentals do matter in this business. And that's why there's a huge disparity here between the Dow and, say, the NASDAQ stocks. And that's something that we need to take into consideration in the future. But it tells me as we've blown out the excessive speculation that we saw in those stocks. Okay, so what we're going to be covering today is how forecasts can help traders and investors, how to use cycles, and a special forecast for 2023, and then questions and answers. And I've already got some questions have come in, and some answers I'm going to hopefully have for you. Louis said I have to pause for a moment. We still have more people coming in. Oh my gosh. Okay, so we're not going to start quite yet. Let's see if there's some questions that have come in already. What does a potential recession affect certain commodities? Well, boy, this is one that really intrigues me because so many people have said we're in a recession all year long, but you know what? We're not. If you look at the arbitrator that says when we're in a recession, when we're not, we have not yet entered a recession. So the gloom and doomers, the purveyors of pessimism who said we are in a recession actually are wrong. We have not entered a recession. Now we may, typically, a recession is 2 quarters, GDP quarters of negative growth. That may happen, I don't know, but it hasn't happened so far. In the forecast report, I do show, if those who have it, the very best recession indicator If that gives a sell signal, you know, it's in a recession, and I would think that it's going to be a while before stocks come back. So, Ethan, can't hear anything. Go out and come back in if you can hear me at all. Yeah, and Brian, I will get to your question a little bit as we proceed here. I think we've got everybody in here now, Louise. Let's see if there's any other questions that will come in. Okay, what are your preferred sectors? Okay, is Tulsa a fallen angel right now? I think, what's his name? Elon Musk is starting to be a fallen angel. It can bounce, but is it going to immediately go back to the highs? No, I certainly don't think so. What are your thoughts on lower lows and the spies and the Qs? Gee, Franklin, you're just like, had so many people, talking heads that you've all seen on television, email me that same question today. What do you think of this? What do you think of that? I don't know for sure. I do think the market's on a short-term basis about to rally here. So that's what I think is going to happen. Here's another really interesting point for you. In the last 72 years, it's a long time period, the market has been down 2 years in a row, twice. That's it. One time it was down 3 years in a row. But other than that, since 1950, which is, I think, a significant pivotal point, because that's when the Federal Reserve really got control of the economy and the stock market and money supply, it's very unusual to see 2 consecutive years down. That's one reason I think just the numbers itself for us to be a bit bullish here. You know, I see so many questions coming in here. I'm not going to be able to answer all of these. I apologize. There's so many questions that have come in. Natural gas, do I hold futures overnight? We should have a whole different thing. Yes, I hold futures overnight. Absolutely. Especially as I've gotten older, and I think this is what a lot of you are going through. This is what the talking head guys from television are emailing about. They're just too damn close to the market. So everybody, oh, it's up, it's down, it's up, it's down. They have no perspective of where things are going. So each day is like getting a Mike Tyson punch in the nose. And we want to get away from that. We need to have some perspective on things, and let's look at that. This is what most people know about 2023. This is stock, you all know. This is Caterpillar, and this was not in our forecast report. This is what investors know about the future of the stock market or futures. Nothing really. They have no idea. So how can we get an idea about the future? That's a really telling question. What are we going to do? Follow the news as the news comes out during the year? News bullish, bearish? Are we going to do that? What are the fundamentals of Caterpillar? Is that going to help us in some fashion? The only way I know that we can predict the future and get an idea of when to be a buyer or a seller of this stock or futures of the market itself is using cycles. So let's first look at this blue line. This is a long-term forecast. Now, you see this little blue line right here? All of this is out of sample. And again, I'm using timing solutions to do most of my work in, not all, but most. So this blue line is all out of sample. The actual price data was not known. The longer-term perspective of this market, it should dip, have a big rally, come down, rally up, and start to rally again. So what we see is that I'm gonna answer most of these questions. So hold your questions until the end, if you will, from now. I think I'm going to answer your questions for you. So this is the longer term cycle that the market should be moving on. And I'm able to create that now for most, but not all stocks and commodities. And I can take it one step further, as you'll see in a moment. But generally, that's a longer term perspective of the market. So the person that has this view now has a totally different view. I have a pretty good idea at the start of this year, like, well, we should do this, look for a rally here, start to take profits here, probably sell a rally here. We have a decent idea of the future. Is it going to be perfect view of the future? No, of course not. I don't have that. I don't think anybody has ever had that. We can go to a short-term basis, and now we're still in Caterpillar. And the blue line here means that all of this is out of sample. This blue line represents the shorter or intermediate term trend of the market. And that tells us in advance we should expect market lows here and here and here. And we look for tops here and here and here. Now, hold on to this. This is such a critical point in understanding how to use cycles. This is where people get really messed up in using cycles. They say, oh, there's a cycle peak here. The market must come down like that. No. The market ebbs and flows. It runs up and then it kind of goes sideways for a while, back and forth. Then it takes off again. Then it goes sideways for a while. Then it takes off again. So just what happens is visually, we all get sucked into, oh, there's a high, there's a low, there's a high, there's a low. And that's not what happens. The markets have to run up and digest price action, but the cycle goes to a low. The cycle goes to a low. Price is just digesting, let's call it the cyclical influences. So don't think that the market's going to go up, down, up, down, up, down. You really have to put this in conjunction a little bit with the what the price of the market's doing itself. And I'll be talking about that in a moment. Okay, so now we can combine all these together. This is where it starts to get more interesting to me. And again, this is all out of sample. From here forward, the blue line and the red line were out of sample. So since the blue line is starting to peak up here, we would think that the short term, this is probably going to be a pretty decent opportunity for a sell. The longer term trend blue is down here, so this should be a decent sell, and probably over here. So we can put together the longer term trend with the shorter term. Oh, we see the market should start to bottom over here. We can take these signals. In other words, and I can't create this for everything, but for most, hold on, we have a problem. Richard can't, no volume. Okay, so the ideal way, I think, is, and there's a third step here. So there's two steps. First, we're going to go, oh, we had a longer term view of the market, the basic general roadmap it should follow. Here's more specific when we should see times for the market to take profits or to accumulate positions in the market. But there's still another step we have to consider. So here's looking out into 2023, and again, we're looking at Caterpillar. So on a longer term basis, Caterpillar looks like it should peak out in March, April. So the shorter term buy signals here in the first of the year, I want to take buy signals in Caterpillar. Don't even write the question, how to get in? Everybody has a different entry technique. You might use point and figure, a moving average, a Bollinger Band, again, for I don't know what you're going to use. That's up to you. But clearly, as a trader or investor, I want to be bullish at this time because the longer term trend is up. But look, to take profits in April, May, because now we see that longer term trend start to go down. Probably not a great buying opportunity in June or July because the blue line, longer term, is down. And perhaps a short selling opportunity over here because the longer term trend should be down and we're at a cyclical high in the marketplace. I hope that helps. When you mean out of sample, what I mean is that that's the 2023 is out of sample. There's no price action here. Just in this, all this price action was unknown. All we knew was the red line and blue line. We didn't know the price action. So it's a white canvas when we start every year. Hold on, Louise, question? Right. Yep. Yeah, so out of sample means we're not using any of the data. None of this data was used to create these lines. Maybe that helps it a little more clear for you. If the trend is up and cycle shows a buy point, as has a better probability of working. Yes, Sadri, that's exactly what I've been trying to point out here. So clearly, we should see an intermediate term low here, and the longer term trend is up. So I would like to look for a position in this market and this time frame. And then you can use whatever arrows are in your quiver for your entry in the trade. Yeah, a buy, that's a buy, yeah, because longer term trend is up. So that's the basics, the best way that I know of using cycles. And here again, we're going to show out of all the price action is out of sample. So again, it's not perfect. The absolute market high was here. The cycle said it should be over here. But you get an idea. Cycles are turning up. We're looking for this buy. Cycles are coming down. Well, I think you can figure it out from there. Okay. So to me, and Nathan asked an interesting question about how to use this with other conditional indicators. To me, cycles are a setup tool. They're a condition. Now, I know that people that are really cycle aficionados think they are the be all end all. They can call the market to the high, to the day, or the low. Yeah, occasionally that happens, but you cannot make book on that. So to me, it's a conditional setup. Now, here's another point. I'll talk about it again in a little bit, is that I'm using weekly charts here for a specific reason. In my testing, I found that daily charts just have too much noise in them to bring out cycles that really are stable and hold up. So if I want to find stable cycles, ones that we can take some action on, I think it's best to use weekly charts. I have trading videos on timing solutions. No, Eric, I don't. Timing solutions, Sergey has a lot of videos on that, and I am still learning how to use timing solutions. When the long-term and short-term are conflicting, you could expect choppy market or to say, hey, you know, I need another indicator. Maybe you're looking for accumulation or valuation or something else. But those who have traded with me know I like to see a bunch of conditions there. And so the more conditions, the merrier. So now here's the third thing though to think about. Here we see, and again, this is out of sample. The red line is out of sample. So we didn't know where the black line price was going to do. So all we know is there should be a buy here, a buy here, a buy here, a buy here, and up here. Well, as the market starts to move for the year, the market, oh, I am in an uptrend. This should be a good buy. This should be a good buy. Now I've started to come off that uptrend. Not so certain about this one. Now I'm in a downtrend. Yeah, okay, probably a good sell, probably a good sell. So we've looked at the blue line, the red line, and guys and gals, we have to look at price itself. I mean, price itself is going, this is the cycle. It runs up, it congests, runs up, congests, runs up, congests. Oh, it doesn't do so well over here. So you also need to use that in conjunction with price action. Greg, I'm just answering the questions as they come in. We do have some printed later on here to be seen in just a moment. What's your definition of long-term and short-term? Well, to me, long-term is probably 6 months or more. Short-term's, you know, a couple, 3 weeks, 4 weeks. I don't do any day trading anymore. I used to do that. You know, I used to envision myself as a gunslinger, and you know what? I would get shot anymore as a gunslinger. I'm 80 years old. I don't have the reflexes. I don't have the intensity that I used to have. And to be that intense about the markets, it doesn't interest me. So that's maybe it comes with age, with experience. Like, you know, I don't need a 1,000 trades anymore. I just want to get some really good trades that are pretty easy to live with. So we're all in a different place in terms of our intensity to the market. My intensity is just not as strong as it was. Your poppy red and blue line cycle charts, are these something we can recreate? Nope, you can't recreate them yourself, Jacob. They are a formula that I have developed myself. So I have not, Louise knows what they are, that's it. Okay, for those who haven't bought my 2023 forecast, there is a major move coming up this year. I am the most certain I have ever been. And I was absolutely certain when I wrote How to Prosper in the Coming Good Years in 1982, we would rally, big bull market in 2002, my blast off book, The Right Stock at the Right Time. I was really certain of that. I am way out on a limb here legendary Larry is going to become very legendary, or he is going to fall off the tree and the legend will be lost. That's how positive I am of the year that I see happening in the market this year. There is a question. Your buy alert was issued June 17th. Yes, that was a great buy signal. We rallied up, pulled back, made new lows a little bit, and went right back to the upside. What conditions do I need to be placed for a major sell? Well, there's a combination of things I use for a sell. If we do get a major sell, we will let all of our forecast users know. We're certainly on the alert for that, and that's part of what they get when they pay for the forecast alert. So if you haven't got it, go to ireallytrade.com, get the 2023 forecast so you can see what you've been seeing. It's about 100 pages. You're going to see where I think the market's headed for 2023. You'll see the best buy and sell points. You get the link to the very best recession indicator. We have stocks, indexes, futures, Buffett's largest positions. Most all the actively traded stocks are in there this year. We've really expanded the stocks in it this year. Okay, let's go back to the market again, right? So this is a chart right out of the forecast report itself. Those are the forecasts at chart 65 if you want to follow along. So how are we going to use it? How can we use cycles? Well, first of all, red line, we see when we should see the significant buying opportunities in the market. Okay, big deal. What does it mean? Well, then we can look at the blue line like, oh, I like this over here. Blue line turns up, red line says, yeah, there we go. Probably a nice place to take profits over here. Now notice what I've done here, and I can't do this on all charts. There's been a 70% rally from here to here, from December to April. This market has rallied 70% of the time. From late April into early June, it's rallied 65% of the time. It's come down 70% of the time from August into the first part of October, and up 65% of the time from October into the end of the year. So now we have another dimension in here in this year's forecast report that gives us an idea of how powerful the market can be there. Raymond, I'll get to the kick-up cycle in a little bit. In your forecast report, some have blue lines and some don't. Yeah, I can't get the blue line for everything. This was a breakthrough I had in my research this last year. I'm still working on it. I can produce it for most markets, and in some markets I can get the percentage ups and downs, but I'm not good enough to get it for every market yet. So my apologies on that. I just can't get it. I heard about these buy alerts. Is this something? No, people don't get mailed this, Jacob. They subscribe to the report and they can see it in advance. I don't do a monthly letter, daily letter, weekly letter, anything like that at all. What about correlation of interest rates that predict prices? We're going to talk about that a little bit in a moment. Zay, thank you. I think I've answered most of the current questions. Okay, so a view from the past can help us see the future. This is, again, the blue line means we only use data from here going back to create the red line and the blue line, and then price is what actually happened in the future. And you can see it's certainly not perfect, but we have a pretty good idea to be bullish because we have lows coming here and highs over here and lows coming over here, and probably not a great big rally because the blue line is to the downside. So you forecast each of the market sectors. I don't in the forecast report. I do the future markets for the energies, for natural gas, for crude oil. I do wheat and soybeans and all that. But I don't do the individual, say the ETF for gold, but we just do gold itself. What are the reasons you can create these cycle and charts? What are the prerequisites for cycles to work? Eric, why cycles are based, I really like that question, by the way, just on time. And that's where everybody gets messed up again, because cycles go from this time to this time to this time. Generally, we should see rallies here and declines here, or the stopping of an uptrend of the marketplace. People think that cycles are magnitude this way. They are not. We must have read it 5-10 times in this year's report. They don't show magnitude. They show time zones because the cycles are based on time. You look at the swings in the marketplace and what beat or cadence they have to them. So they're all about time. They're not about magnitude. I hope that helps answer your question. The forecasts are based on Dow. Yes, my forecasts are based on Dow. Why? Because I have the information on the Dow Jones Industrial Average going way back to the 1800s. You're going to see that in just a moment. In fact, that's what I'm really excited about showing you today. So the cycles occur at the same time in, say, the triple Qs or the NASDAQ as they do in the Dow. It's just one market will be more explosive than the other market. But in terms of the pattern and the timing, they come at the same time. One recently, the declines have been much greater in the NASDAQ than in the Dow. But on the way up, the rallies were stronger in the NASDAQ than in the Dow. So the timing, though, is just the same. The chart, blue line is going down, but the black line is all up. Yes, and this is a good example where the blue line says, oh, we should expect the market to come down here, and it doesn't. So we may say, well, I'm not going to get bullish until over here, and now I get both in conjunction. So good, now I can look for a trade. Most people try to trade all the time. Grab every little swing in the market. I'm not smart enough, and don't take this personally, but I don't think you are either, any of us. So I'm looking for the best times when I can find the best setup to enter the market, not just, oh, I want to trade. I have had enough of just trades in the marketplace. Okay, let's talk a little bit about inflation. Yesterday, the jobs number came out. That's the black line that you see here. And it's really interesting. I extended it. You can see the black line. I pushed forward about a year, almost quite a year and a half. And look how closely inflation, that's the red line, follows the black line. Look at that. What a correlation between inflation and the job reports. So this is the rate of change of jobs. And it was down, the rate of change was down, which suggests to me less inflation. Less inflation means what? A stoppage of these big hits in the interest rate market, which would be very positive for the stock market. Robert, email me about that, okay? What's the best way to define the trend? It's really interesting. If you just have a kid look at a chart, he can tell if the market's an uptrend or downtrend, and an adult can't, because we get in, oh, the Democrats, Republicans, Jim Cramer, Larry Williams, a recession, whatever. Just look, are we higher than we were 50 days ago? If so, you're in an uptrend. A real simple rule. That's all you need to have, really. So I think this is a potential bullish situation for us. And this just came out today from the New York Fed. Just got this a couple of hours ago. Here's inflation, core PC inflation year over year. It's all started to peak out. Again, this would be very positive for the stock market. Is your researcher using harmonics? And no, Frank, I haven't, all this stuff that's supposed to work in cycles. I'm not good enough, or I'm not smart enough to figure it out. I haven't found out all these things. The Metonic cycle, I can't get any of that stuff to work. So I just went into the data itself and said, okay, data, you show me what's there, as opposed to bringing in these preconceived Hurst cycle formations or whatever they are, right? And then I started to see what I think is the truth of cycles. But all the stuff I just brought in was like, wow, I was, there. Okay, this is really exciting to me. I just recently uncovered a very long-term cycle pattern that I think we all need to be aware of. Yes, we're moving on this last cycle. I've moved inflation actually back. I moved inflation back, and you can see how it correlates. Okay, so hold on to your seatbelts here. Can you please add grid lines to the chart? No, I don't think I can. Then they're too hard to print and they have too much stuff on them. Sorry. Which carries more weight, cycles or true seasonals? I like to see them both come together, and I prefer the cycles. Why? Because they're more immediate. Remember seasonal patterns, look at all the data for years about when we usually bottom in the S&Ps or top in soybeans. And by the way, we'll talk about soybeans in a moment. Remind me if I forget that one. I think cycles are, especially these intermediate term cycles I found, are more immediate and are more valuable. Yes, Buzz, it is being recorded. You will get a link to it so you can watch it again. Do your cycles correlate with put-call ratio? I have no idea. I've never tried it. You know, there's so many things to do in the market. You know, I'll go to bed at night and say, I don't have anything to do tomorrow. Well, by the time I wake up, oh, I got to look at that. There's always something to learn. Okay, let's go. This is what I want to try. Ready? Going from the 1890s all the way to 1930. What I want you to notice is this little cycle. This is the general long-term cycle. But look at this pattern. This is kind of a rally, a dip, come up, and this, so a lower low here than here. Okay, you're going to see that again. So watch this a lot. Yeah, again, John, I see them as good setups in the marketplace. And you can use, you can use seasons and cycles. Okay, so burn this in your mind. And notice what happened. Well, the cycles said that's a high, actually made a higher high here. And you're going to see that again. But this is what I want you to focus on. And look what happened from here to here, a long time before we took off again. Trading range for what, 10, 12 years. So watch this pattern again, because we're going to see this again. This is 1930. Here's that same pattern we're just looking at in 1930 to 1940. And look what we have again, a huge long-term that we don't really rip off until here, and we go up. That was right here over here. Got it? Right here. Then we get into those, anybody can make money in that market. Okay, did you burn that into your mind? Remember this little thing we're looking for. Here's the 1960s. And I remember this so clearly. I got in the market back here, and we really didn't go anyplace for a long time until, look, ooh, we went up again. Range-bound market. And the cycle is able to show us that. Pretty good buy point here, buys here, but this one we really take off to the upside. We've seen that 3 times now. Here it is in the 1990s. Here's that little hook formation. Here we are here. And look what happens, range-bound market until when? Right here in 2011, away we go. Anybody can make money in that market. Whereas this is a very hard market to make money in. The black line is a Dow here. The black line is a Dow Jones Industrial Average, Armando. Okay. Oh, you'd probably like to know where we are now, right? How did I know that? This is where we are now. Here's that little thing we've been looking at. So this is when we're probably going into a range-bound market about 2028, 29. And the good, I know it's a long ways off, 2039, God willing, we're still here to trade it. But this pattern, I think, is really helpful to us for very long-term people to know that's a runaway market and this is a trading range market. Notice this is the point that's coming up pretty soon here. The market runs up well to this point, this lower high here, run up well there, run up here, and that's where I think will be the next significant high in the marketplace. That this is not the ultimate high in the market. This is a long-term cycle, move to the upside, pull back, and that's where we enter the range-bound market about 2029 and for almost 10 years. So I think coming up, we're going to have the perspective of range-bound. What does that mean? It means buy big breaks, sell big rallies. It doesn't mean buy and hold on forever. That buy and hold on forever is going to soon fade away from us. The red lines don't indicate magnitude. They don't indicate magnitude, and they're not perfect. So this isn't exactly at the high in the market. Remember, we're using, 150 years of data here. So they're not going to match perfectly. And the other thing, I'm glad you asked that question, is cycles do a much better job of calling the lows than the highs. I don't know why. I have an idea. I'll share my idea with you. My idea is, go back to 1929. This data is still in there, big market high, right? Big rally. But the market's in a uptrend, so the market highs and cycles don't work very well because the market eventually makes new highs. So what happens is, let's get another example of that. Oops. These highs don't correlate with absolute market tops because it looks like we have a big high here, right? We don't, because the market's in a big uptrend. So in a market that is biased to the upside, and clearly stocks are, the greatest money-making machine in the history of the world is this Dow Jones Industrial Average. You buy and hold on. Upgrade, when they upgrade the stocks, you make about 9.7% a year, doing nothing, just holding on to it. So the cyclical lows work. The cyclical highs are suggestive, and that's what gets cycle guys all screwed up. They get, most all cycle people get too bearish too often. That has been my experience. They look foolish. They're always calling for bear markets because they're really bucking the trend. The cycles say, yeah, we should have a higher, but yeah, it may not gonna be a big one. So a long answer for that short question. I hope I didn't bore you to death with that. What tells us when the seasonal chart is sloping up? Well, the seasonal is up, seasonality is the upside. You expect prices to rally. Okay, so again, you can see this, since cycles work better at market lows than highs, keep that in mind now. Big lesson today. We're here, we should be over here, and then we're gonna get a nice buy point here and a nice buy point here. Now, this isn't to the day, it maybe not even be right to the year, but we have a pretty good idea that we will soon be entering a range-bound market, and that's going to drive people crazy. Ooh. Well, I love Clint Eastwood. You know, all you have to learn in life, just listen to his movies. A man has to know his limitations. So do cycles. Oh, this is the trouble with cycles. It can be all over the place. So the limitations of cycles, they're a setup tool or confirmation tool. They represent a zone to look for an entry or an exit. I think they work best on weekly data, as I was talking about. That's what's important to me about cycles. Thanks for that, Dennis. I don't think I've read that. So that's the limitations of cycles. Okay, time for questions, and a couple of questions did come in. The stock market's not off to a good start this year. It seems dismal to me. When do you think it will pick up? Well, we've had, what, 4 days of trading activity. So I would expect somewhere in the next 5 days, we're going to see this market take off to the upside, maybe 6 days, but we should be right here, right now. Will some of the best trades from past still work? Yeah, the holiday trades still work. They work for many, many years. On average, not everyone will work every year, but on average, of course, those seasonal trades have worked. You look for cycle inversions. I'm not wild about cycle inversions. I pay attention to them, but you know, Wells Wilder came up with that term, interesting term. Okay, are you still bullish on Amazon, Microsoft? Yes, I still think these stocks are the quality stocks of the FANG groups. I mean, Facebook, I don't think that's such a quality stock. So yeah, I think this is a real company. These guys really do things. So I am just going to maintain my bullish position on that. Okay, wow, too many questions. Let's see. Does emerging markets like India can have a runaway bull market? I don't know. I haven't tested India, and without testing, I can't answer. What year is a range-bound market beginning? About 2029. What kind of indicators do you look for indicate cycle flips? Well, I'd want to look for accumulation in the market. Unmute. Bill, maybe Luis can help you. Do I ever sell naked puts? No, I don't. I just like to be net long or net short. Correlation of interest rates predicts bearish. Yeah, the interest rates potentially are bearish for this coming year, bullish for the first part of the year, and then bearish at the end of the year. So we'll have to see what happens when we get there. And okay. Uh, Compare 2007 with subprime crisis. I don't think we can. And Louise, okay. Got a power failure here. Okay, we're back here, I think. Did we just have a power failure? We had power failures a lot here in the Virgin Islands. Fortunately, last week, President Biden was here and we had no power failures when he was here. Go figure that out. Reminder on soybeans. Yeah. So let's talk about soybeans. I made my first $1 million in 1973 trading soybeans. It was in a big bull market. And I noticed that soybeans were in a big bull market in 1963 and 1953 and in 1983. Go look at soybeans, big market to the upside. 1993, big market to the upside. 2003, 2013, soybeans were bullish. So I think we have a bullish opportunity coming up for the bean market this year. And in our forecast report, I show when I think that's going to happen. How should we use options? I don't know anything about options. I'm not an option guy. You have to go to somebody else. Yep, we still like Darling's the Dow strategy. Can you show the 1930s chart again? What affected World War II? Sure. There's the 1930s chart again. World War II. You're looking at news. I think you're looking at the wrong thing. To me, I may be way wrong here, and it's probably going to upset some of you, but to me, the market is pretty much predestined to do what it's going to do. The analogy I've come up with, the mathematicians and a lot of the professors say that the market is a random walk. In fact, they say the market is like a drunk staggering from one lamppost to the next post, and you can't predict where he's going to go. And I agree with a lot of that. I think the market does have a lot of random walk in it, just like that drunk, except for, here's the breakthrough from Larry Williams, the drunk knows the way home. He's ultimately going to get home. And I think that's the market. The market staggers around like the drunk, but he knows the way home. The market knows where it's going. And that's what I think really makes this stuff work. Robert, you'll get a link to the recording. It is being recorded. We'll send that out to you. The invisible hand. Yeah, the invisible hand, the market knows where it's going. Was your futures trading done intraday charts? I've done all that, in 62 years of doing this, 60 years, 60 plus now. I've done all that. You have to find what fits your temperament, what fits you and your wife, your time schedule. You can't be me. I can't be you. You have to figure out what shoe is going to fit you. You're bullish on 2022. I sure was, and the S&P or the Dow was down 9%. The bigger market, the speculative market index were down almost 20%. But remember, we got the low right at the bottom, and we got a big rally up, pull back, and another big rally up. So I'm okay. Nothing is perfect in this business. The tech things got slaughtered. Yeah, they'll come back, probably not as rapidly as some of the value stocks. Okay, let's see where we are next. Which charts trends are the ones that I will personally be using? This person says long like gold, long euro versus a dollar, long the Dow. Well, yeah, I think there's going to be a nice move in the Dow. That's in the forecast report for those of you who don't have it. That's, to me, is the big move of the year. Obviously, the soybeans, I think, is significant. The low doesn't come this year, the buy point, when it has in the past, based on my cycle studies. So that's important. Gold, I think, is going to be a good opportunity. I don't trade all this stuff. I trade 3 or 4 markets, and I have people, some of you want to trade stocks, some want to trade gold, some silver, some palladium, some platinum, some the Hang Seng index. So I don't trade all that. I just try to focus on the ones that I've traded the most over the years. You see the S&P going, get my forecast report, go buy it, and you'll see exactly what I think the market is going to do this year. And a yield curve discussion, that's really covered in my forecast report. I think we have 3 or 4 pages, lots of charts on that. The yield curve sometimes works and sometimes doesn't. Really. And maybe we can figure out when that's going to take place. Cycle work on COT reports to predict that. I don't know. I've been intrigued with that. I don't have enough data on it to know. Okay, so I've been answering the blank page of questions and answers. Do you apply cycle method interest rate? Absolutely, we do. We apply cycles to the Federal Reserve, the Fed discount rate, to the Treasury bond market, yeah, and to the yield curve as well. The yield curve has a very strong cycle to it. Okay. Can we get buy-sell signals going with the forecast on TradeStation? No, I don't do buy-sell signals. The forecast report is all that I do. For those of you who watched my work in stockchart.com, all the stuff on YouTube, the Jim Cramer stuff, the Charles Payne stuff, and I get paid anything for that. The only product I have is this. If you want to support my work, go buy the forecast report. How do we get your red and blue lines prediction moving forward? Again, they're in the forecast report and they go for the entire year. Hey, thanks, Wayne. Yeah, and you've seen my work on 30 and 10-year notes. Is the gold a leading indicator for the stock market? No, I don't think gold is, but I do think gold is a leading indicator. Inflation. You know, we thought that inflation was a leading indicator for gold, but actually, I think it's the other way around. Okay, well, I think we want to wrap it up. Forecast report's about 100 pages. If you haven't got it yet, go get it because we're going to raise the price up to $249. So you can save yourself $50 if you get it now. And both Louise and I would like to wish you a prosperous 2023. My crystal ball predicts good times are coming for you. And those who did buy the forecast report, we both want to thank you very much for supporting my work. It's what keeps the research going. It keeps all the stuff that we do here. How can I ask a question? You could email us. Can you go over a US index 2023? William, on the 2023 chart, email me, okay? Because we're trying to wrap it up. Your TDOM, no, we don't have TDOM in Tesla. We do have a forecast for Tesla in the report. Go get it. Trading day of the month stuff, TradeStation changed everything, so we don't have it available at this time. We may do something with it in the future. Okay, thank you. With that, hey, Joseph, good to see you. We are calling it quits. 45 minutes of market activity. We'd like to thank everybody very much for being here. And those of you who bought our forecast report, thank you so much. We appreciate that. That's what keeps stuff going. If we get major buy or sell signals, you'll get a copy of that. We'll do it just as we did last year. We'll let you know. So until then, good luck and good trading.